with this, we come to our next session, which is a keynote presentation, which will be by our next speaker, Mr. Sachin Shetty, who is coming on a forum for the first time. So I think I would like to introduce him. Mr. Shetty, Sachin Shetty is a seasoned strategy expert with over 2 decades of experience in the materials, metals, industrial goods, energy, and automotive sectors. Mr. Shetty has held leadership roles across renowned organizations, including Softoria, Infotech, Shapoorji Pallonji, and Feedback Consulting. He is known for his sharp strategic insights and deep industry expertise. Mr. Shetty brings a unique perspective to market trends, project executions, and business transformation. We are honored to have him sharing his knowledge and thought leadership with us on this platform today. And he will be sharing a research driven outlook, offering sharp analytical insights and forecasts that reflects emerging risks and opportunities. Please welcome Mr. Shetty. Mr.
Binaji,
Shetty,
thank
over
you
to
very
you.
much. Yeah, thank you very much. Late good morning to all of you. Pleasure to be on this platform. Um, Chandra sets the good, backdrop to, talk about the overall metals market outlook. I think the context is very invigorating. I'm sure the panel discussions are going to be as exciting and insightful. Allow me to share my thought on what the global economic. I mean, global is important and imperative at the moment, because we are entering into a new steel era defined by fragmented global growth, decarbonization imperatives, of course, the whole trade tariff barriers, then the multiple or trade corridors. And when you look at India, it's just not growing in isolation, right? We are emerging as an third axis between the I would stretch myself, softening China and the critically reviewed and largely deliberated around the EU standards. We are at a position where in India's position around the global steel sector, particularly, is attaining a very critical, position. We are evolving both structurally and strategically, and hence, yes, if you see India's metal market in general, we can't just look at it in isolation. So let me start with the select global traction that we've seen in amongst the economic perspective, trade perspective, as well as on the commodity prices to start with, and then I'll get into the metals. And Binaji has requested to me to cover copper and aluminum along with steel. So I have few section on both. I hope I'll be able to do justice to this in the next 15 minutes. I hope you are all able to see my screen. Allow me to walk you through that and share my thoughts. Binaji, is my screen visible?
Next, Sachin. Slides.
Yes, yes, very much.
Okay, great. Brief about us. I take this opportunity and Binaji's permission to talk about us. We are a vertically integrated research and strategy firm operating in India, Middle East, and Southeast Asian geographies. Very, very passionate and result-driven team of 32 professionals. Since 2024, we joined forces with Bigmin, where we leverage their vast pool of curated data sets, intelligence, and their connect to add value across different engagements. We operate across three primary, service lines. One is helping companies grow their existing business, expanding into their adjacencies or exploiting, newer frontiers, and then third, acting as a plan ahead team. This is in brief about us. Should you have any of you have any interest or would like to understand our service portfolios detail, please feel free to reach out to us. Well, there are 4 sections. Chandra did talk about the economic perspective the also questioning the Indian steely resolve to be in a position to participate in these emerging dynamics. I am sure the panel talks about it, but let me just put my pointers more analytical and not ask those or repeat the questions. Maybe some of those questions would be answered as I walk you all through this deck. So I'll talk about briefly about the economic prospects and the prices, then the India's position, and how we prepare ourselves to be able to be the mega frontier, major growth pillars of the steel sector in particularly for the next decade, and then also browse you through the copper and aluminum market. So let me bring the attention to the global economic prospectus. Of course, if you see, these are all the shocks and the global economic deceleration that we are seeing is an fact that actually is on the card horizon, right? And it is just accelerating on account of certain decisions that have been taken around the emerging, sorry, rather the advanced economies. What is, however, critical here is that there is an threat of recession or a prolonged, deceleration in the economic outlook amongst the emerging advanced economies. It will have impact on the emerging and the developing economies as well. So seems like the trade shocks going to be intensifying, which will already has seen a bit of a front loading that we have seen in the previous quarter, and that would mean there is going to be slower trade flows, slower investments across the geographies, and which is going to also be accelerated with all the geopolitical fragmentation that we are actually seeing. Now, what it would mean in terms of the implied opportunities is to be able to ascertain the downside risk, in terms of the emerging global economic slowdown as well as the rising tensions. So to be able to preemptive policies, how and we have seen some measures from the central banks around the world, including India. So that is a welcome
Hello.
move. Yeah. Am I audible? Someone want to come in?
Okay.
Please
Yeah,
go
quite
ahead.
good, Sachin. We're able to hear you.
Please go ahead. Thank you.
Yeah, thank you. Well, actually, disruption in form of a trade would also imply that there is to be a recalibrated supply chain, evaluations that one needs to apply. Maybe we have to see how India will benefit from the benefit of diversification away from geopolitical hotspots. Then we have regional trade alliances. I mean, in fact, our association with the CRC market can be strengthened as far as the metals are concerned. Of course, both geographies have intrinsic advantages, be it in terms of the natural resources or processing capabilities or very significant strategic consuming segments. We have been exporting, we could export a lot of semis to these geographies such as CRC, etc. And similarly, while we actually are stepping up in terms of our product mix, we need not just focus on the commodity grade, semi or even the finished product exports. I think these markets as well are evolving. It should also absorb, superior grade, different composition in terms of the grade, etc. Right? I mean, those are the elements that we could actually explore in the neighboring regions, as we are cornered with with the emerging tensions because of these conflicts that are going to see rise numbers. Now, from the economic outlook, let's move to the global trade prospects. So I think I would like to draw some attention to some of the numbers that we have put here. So if we see the chart A, that refers to the effective US tariff rates, and as you see, it would be the current rate is actually on an average on an average hours around 20 to 25%. And if you look at the trade policy, uncertainty index, it is actually one of the at the highest levels, right? So it would mean then unpredictable policy shifts in terms of the resultant of the TPU, which is going to certainly disrupt the trade dynamics here. Similarly, if you see what does it mean in terms of the short-term frontier, is that of course there will be an volatility, inventory buildups are likely, and as we've seen in many cases in the value chain, and it is already as reflected, we would probably see this trickle down effect of these tariffs, and the trade disruptions to impact the AMD more than the advanced economies. Now, this may be countries such as the advanced economies might benefit with the EMD economies. This would definitely allows them to export into the EMD. So it should, again, like Chandra mentioned, might put pressure on markets such as India. Going to the commodity markets, now this is not my assessment nor interpretation. I am just representing a messenger here. It is the extract from Bloomberg and Global Economic Forum document. And as you see, and their expectation is that the weaker global growth and trade tensions and policy uncertainties, we broadly going to put pressure on the commodity prices and keep the prices under depressed state for long. It is applicable to both. In fact, the base metals such as copper, aluminium already seen a decline of 5%. Agricultural prices are also expected to remain somewhere stable or soften. But yeah, I mean, what also indicate is that the downside risk likely to stay prolonged here. And as you may see here, and this is the India specific prices, and we are representing one particular cluster, which is Ahmedabad. You would see that the prices are since March, 7th May have been actually softening, and softening at a rate which is not seen prior. We have a chart that is coming up in the subsequent slides, which compares the 2024-25 prices, and you see that the gap is actually widening. So the correction is not just seen in the case of the any particular variant of the product, but it is generally broad based. Yeah, so this is maybe a very close look at the select commodities here, and it will give you a clear impression of the movement vis-a-vis each other. So starting from the scrap and all the way going up to the HRC here. Yeah, if you see the primary TMT prices across Mumbai, Chennai, and Delhi, the one that in the red line indicates the prices of 2024, and the one on the gray edge indicates the current prices. So you see that the prices have remained higher than the last year levels in between February to April, and then since then it is showing a larger correction downwards, and the gap is actually widening across the clusters. And it is also true for the secondary TMT prices. These are all the mill to distributor delivered prices and not necessarily retail. But yes, I mean, there is seen stronger corrections, and rather the gap as related to the last year, and it has been a very concerning factor for all. And this would also lead to customers being very cautious in terms of their buying needs, and then staying at the on the fence, waiting and on a wait and watch mode at the moment. Give you a perspective before I get into the metals specific select product discussions that are India specific. Let's just give you a summary of what it is like to be, what's the kind of a scale up outlook that we foresee for the select metals around the world. We have about 10 to 11 of them listed, right from the precious metal all the way to steel at the bottom. Well, I mean, I think the copper is something which is expected to grow at around 6.6%, aluminum at 7.3%. And then, of course, if you look at the cement, which is at about 4.5%. But yeah, steel, we have not seen much of a growth. We are projecting that the steel world growth would crawl at around 0.6% levels. The production expected to be around 1,973 million tons by 2030. Well, India may be a separate case, and partly I will try and address that equation in the next sections. Now, while the global market remains volatile, unpredictable, uh, and also under tremendous pressure in terms of the prices, and global trade patterns remain disrupted for long. Well, why India, position matters more than ever in the global's next decade. I think it would bring our focus back to India and what we can actually achieve if we collectively take the position, and bet on the India's growth prospect here. Now, let us and deep dive into. Of course, these are four themes that I have come about and try and talk about it. And we all know that when you look at the global market, trends, India is definitely one of the bright spots, right? I mean, growing at around 6.5, 7%, both economic as well as on the steel consumption. We also know that the steel may not remain an unipolar position for long. For example, China won't be dictating much going beyond, both in terms of though their capacity remains high, but consumption remains still at around 40-50% levels, but the patterns are shifting. So these are driven, of course, by not just the consumption pattern, but also, the emerging standards with respect to decarbonization drives. So you have the global north, which are now in a state where their consumption have evolved. They are asking questions related to decarbonization, low carbon emissions, and steps in the direction of producing and consuming the low carbon emission steel products. Whereas the southern pole, which actually still in that evolving stage, emerging market and the developing economies need to build a lot of infrastructure, basic infrastructure, including the housing needs. So your steel requirement would be far away from the typical north hemisphere requirements in terms of carbon, etc. We need to fulfill basic, needs. So there is a divide that we are seeing, and then India is at a position where we have to, of course, maintain that there is maintain the need for creating infrastructure, ensuring housing for all, and yet also develop products that are low carbon intensive, and then also product that are of the product in terms of the variant and the grade and other composition which are of the future in nature. So thereby we are in a position where we can, we are in a position where we just fill the voids that are, or rather we act as a bridge between these, the north and the south steel dynamics. That's one. Second, we know that the reshoring is something which is now happening, taking center stage. Middle East is going to emerge as another key, manufacturing cluster for its intrinsic value in terms of the low energy cost, the natural gas availability of natural gas, etc. So they're going to play a major role in terms of the in their contribution in the low carbon emission green ecosystem in the future. So you have Middle East as a market that is going to emerge. India, of course, have our own the needs and the demands to meet. So this China will never remain an unipolar, and the steel world will never be unipolar. And we see this is going to become multipolar. So at least we see three, dimensions already. Maybe there is another front which may be in the form of Africa emerge as well in the near term. So net, we are now not just uh, trying to be, only player in, sorry, one of the many players in the country, but we are trying to be one of the most relevant player in the party into the global steel ecosystem, and may not be the greenest and definitely not the cheapest steel producer. And we are proving to be one of the relevant player. I think that's key here. Let's look at a global perspective in terms of the steel crude capacity position between now to 2035. We are seeing that the crude capacity would be in the range of about 2,600 million ton by 2035. And if you look at the incremental data capacity that is going to come by, we are going to add nearly 152 million tons, 148 million ton by 2035, which is almost 142% of the net capacity that is going to come up around the world. So there's significant position, and I'm sure it will answer part of Chandra's question about our, strength and capability to be, meet the desired capacity. Maybe not 300 million ton in 2030, but for sure slightly in that range by about 2035. So that's something which we need to watch out, and I'm sure panel will talk a lot about that. Um, Construction infra, as I said, would remain to be the main and cornerstone of our demand situation. However, the consumption need not remain just the plain TMT rebar and the GC alone. The demand for value-added product, demand for steel in multi variants, both from a point of view of grade mix, and also in the form of a downstream, and the steel as a intensity in the overall construction is also seen a rise. The mills will have to take a position in terms of supplying the mill grade to the more downstream, and mill will have a bonus of uh, driving the or orchestrating the demand, and not just driving the capacity. So understanding the customer needs, understanding the divide between the urban and the rural, need of the rural market, working and creating a solution for the demand and demand from the rural market would be imperative in terms of able to evacuate all the capacity that we build or all the steel that we build produce. So it is we need to look at a pivot shift in terms of being only capacity as the lever for our steel demand, but steel growth. But we need to start orchestrating the demand, story as well. So big onus on the producers plus the other participant in the value chain to ensure there is enough demand and the pull that we create, so we consume all the steel that we produce, because we know the trade disruptions are going to be very extensive, and they are going to be not export friendly alone, right? Well, we have as I said, may need to look for different pockets of opportunity for exports, but the quantum of the export would see a significant pressure in terms of the low cost steel that might come from just our neighbor countries and other geographies such as CRC and even Middle East, if they go big on their overall steel making capacities. So and then they're going to be low carbon intensive steel. So Indian steel mills and the other fraternity around will have to play a significant role in terms of finding avenue. So I would just mention, while we are talking about 160 per capita, I think we are at the urban alone state sitting at 220, which is actually the global average. Where we lack is the rural consumption. Rural, we are at about 22 kg per capita. So need lot more impetus and emphasize on developing rural consumption. I think that is critical going forward. Otherwise, we'll be sitting on an extensive unused capacity, and that will be something which we may not be in a position to absorb. Um, yeah, well, I actually kind of put forward my thoughts around the demand is going to still come from the construction and infra, auto and packaging, and others are going to play a supportive role. The manufacturers, and we have seen both of Indian manufacturers, the mix amongst all the large integrated players and the others, progressive steel producers, operating EF and IF, seen gradual shift in terms of the product mix. These are definitely a welcome move. We can't actually go and think about expanding the rural consumption just with TMT and galvanized corrugated sheets anymore. Their requirements are growing. I mean, you can actually draw parallel from the way the consumerism is, enhancing. For example, if you look at the FMCG growth, if you look at mobile phones, etc., I think the most it's not just that they're selling only the functional phones in the regions. They are selling smartphones, and it is true for automobiles. Well, two-wheelers does, make a significant share of the automobile sales, but there is also feature rich, sorry, cars and vehicles, be it in terms of the pre-owned cars, etc., being sold in that market. And I did a quick check on certain parameters, such as related to the construction, related to the savings, etc. I think the rural saving rate is one of the highest. I mean, amongst the OECD countries. In fact, it's larger than the urban center. So affordability is not a concern actually. We need to look beyond treating rural consumer as a price conscious, etc. I think there are effective means to exploit that. And if you see cement consumption there at about 100 kg per capita, if you see, as I said, savings rate, it's about 32%. And automobile share, of course, is one also leading indicators in project that rural consumption and the requirement would not just remain a plain vanilla product alone. And so Indian steel fraternity will have to project the rural as the cornerstone of their future demand, which means you may need to go closer to the rural customers. You may need to set up service centers. You may need to set up stocking points, making sure those product in the right configurations are delivered to them. There is a lot of local economic activities that are taking shape. So their need may not be similar to that of the large buyers in the urban cluster. So how do we make sure we meet their specific requirements? Would give you the perspective, would give you the leverage. I mean, rather offer you the leverage in terms of expanding your penetration in the rural market. And trust they're all as aware and educated as the urban customers. So I would want to know with that
Mr. Sachin,
note. Yeah.
adhering to the time slot,
Yeah.
otherwise we'll not be able to complete the panel discussion. Thank you.
I'm
Sorry for
sorry.
interruption.
I'm sorry. I'm sorry.
Yeah, Sachin, if you can take a minute or two to conclude, truly appreciate. Yeah.
Yeah, sorry. So I just have a couple of slides on the copper as well as aluminum. So yeah, let me just walk you through the copper side. So this is 1.7 million ton is the copper demand by breakdown. You can see that by product, wire rod is the major contributor in terms of 997. So followed by pipes, tube, foils, rod, and others. We are a net importer of copper. And then of course this is the finished product, semi-finished product, as well as the copper concentrate. And looking at the way the copper demand is going to mature in the future, I believe there is going to be a significant opportunity for the participant here in terms of creating the necessary supply chains, alignments, capacities, and capabilities to meet the emerging requirements. And that is taking shape in terms of the large Indian manufacturers such as JSW, Hindalco, and Adani getting into this business. What lies ahead for us in copper? Copper demand is projected to grow between 6 to 8% in 2025. Obviously, EV-related copper consumption could account for about 15 to 20% of this demand. Price forecast averaging around $9,000 to $10,000. Supply challenges: new mining projects in Latin America and Africa will come online, but may not significantly elevate tightness due to delayed timelines. Major consumption region like India, China, US will continue to dominate the demand here, with India likely to see a 10 to 12% growth in copper consumption. Last section on the my presentation, it is the aluminum market. So we have primary aluminum capacity at 4.2, operating nearly at about 100% levels. Secondary, we have output of close to 1.8 million tons. So total production of 6 million, and our total domestic consumption is near about 5 million tons. So we are a net exporter of aluminum. Looking at the projections, we see aluminum sector to grow by about 8% levels to 9 million ton by 2030. Again, largely driven by a combination of the construction, electricity, energy, and the automotive sector. Some demand drivers here, as I said, summing up: building construction, transportation, and or packaging sector will collectively drive the demand. Yeah. Thank you very much. I had to rush to the copper and aluminum sector, but I'm open to take any questions or any follow-up emails.
Thank you, Mr. Shetty. I'm sorry for intervening, but it was a very informative and enlightening that we didn't really feel like stopping. But because the panelists are there for panel discussion, I thought let me intervene and adhere to the time. Thank you so much.
No, pleasure.
Now,
Pleasure.
we move to our core session.